So what was your process? How did you do that? Did you just start calling people? Like, how did you build your client base and get to kind of, your initial revenue?
Yeah, great question. So I was actually building it while I was still working full time. I knew I was going to leave and everything was in process. So I had like a 6 month window where I knew my paperwork would be coming at some point. I need to get out of this and I need to build my own business up to a level where I've got some cash flow coming in, that it's not going from a big paycheck to zero day one. So I knew what I was doing, but I wasn't very good at sales or marketing. My background was all accounting, finance, numbers, and to be quite honest, all the stuff that most entrepreneurs don't even want to look at, or the eyes kind of glaze over when they do look at it. So what I did is I reached out to my close friends at the time. I'm like, hey guys, I'm going to start my own firm. I'm going to do outsourced CFO services, which, in hindsight was a crazy thing because that means so many different things to so many different people. So if you
Yeah.
ask 100 people, what does CFO services mean to you? You're going to get a very broad range of answers there. And looking back on it, I would have changed that. I would have done that differently. But I ended up literally saying yes to every client that was even semi interested in working with me.
What's up, everybody? Welcome back to another episode of the Big Hitters Podcast. I'm joined by Casey Chohan. He's the founder of Together CFO. Casey is not unfamiliar with public speaking, and I could tell as soon as he hopped on this call that he knows how to run these things. He's been on some podcasts before, I can tell. So I'm excited to dive into it with him today because he's a fairly large firm, and I want to pick his brain on it. Casey, my first question is always the same. Tell us about your story. How did you start your company? How did we wind
Yeah.
up where we are today?
Firstly, thank you for having me on, and super excited to share with everyone. So, how we started was through frustration with corporate America. My background is in accounting and finance. I was working for a big Fortune 500 company straight out of university for 8 years. I did 4 of those years in Europe, working up the ranks, and then transferred to America. Did another 4 here until I got my green card and quit and started my own company. So, I went from being a corporate executive, comfortable salary, living the dream, to then throwing it all away and backing myself as an entrepreneur. So that was a scary time, to be honest, because you're going to have from this secure paycheck to backing yourself. And it was like, it's been a while now. That was back in 2016. So it all worked out. But it was definitely scary to put all the chips on the table and go all in on yourself.
Yeah, well, so what was your process? How did you do that? Did you just start calling people? Like, how did you build your client base and get to kind of, your initial revenue?
Yeah, great question. So I was actually building it while I was still working full time. I knew I was going to leave and everything was in process. So I had like a 6 month window where I knew my paperwork would be coming at some point. I need to get out of this and I need to build my own business up to a level where I've got some cash flow coming in, that it's not going from a big paycheck to zero day one. So I knew what I was doing, but I wasn't very good at sales or marketing. My background was all accounting, finance, numbers, and to be quite honest, all the stuff that most entrepreneurs don't even want to look at, or the eyes kind of glaze over when they do look at it. So what I did is I reached out to my close friends at the time. I'm like, hey guys, I'm going to start my own firm. I'm going to do outsourced CFO services, which, in hindsight was a crazy thing because that means so many different things to so many different people. So if you
Yeah.
ask 100 people, what does CFO services mean to you? You're going to get a very broad range of answers there. And looking back on it, I would have changed that. I would have done that differently. But I ended up literally saying yes to every client that was even semi interested in working with me. So on one side of the table, I was doing profit and loss, P&Ls, and kind of breakdowns and forecasts. On the other side, I was fundraising for people and doing pitch decks. And I was so scattered that it was through necessity, right? I needed a cash flow. So I said yes, I took everything on, but I knew that I wasn't able to scale because one, it was just me. And then two, it was all time dependent on me. So I got to like 5 or 6 clients and I was getting burnt out. I was like, this is not scalable. It's actually worse than my corporate job, but I know that I don't want to do my corporate job, so I've got to figure this out. Long story short, we had a really big success with one of our clients. We helped him scale from $5 million a year all the way up to $120 million a year. So we had a huge success with him, and that created a huge tax issue for him. So he then kind of bullied me into figuring out how to reduce his taxes, even though I knew nothing about it. Totally outside of my comfort zone. But again, the same mentality of just say yes, we'll figure it out, just say yes. And that then led us to helping him save $12 million in that first year on taxes
What?
by using charitable structures. So we
Did
figured
he
out
want
that these
did he
structures,
want to invest that in any virtual assistant or AI enterprises? I'd like his number.
this was a while back, but yeah. So long story short, we figured out, oh, well, we've saved him $12 million. Maybe other business owners would want that structure that we found and created for him. So we actually doubled down and niched into tax saving strategies specifically for high net worth entrepreneurs off the back of that success for that client. And then we kind of phased out. We still do a little bit of the CFO services, but the main bulk of what we do is tax strategy for multi 7 and 8 figure business owners.
Hmm. So, do you have a niche? Do you have a particular industry that you find yourself serving time and time again, or is it pretty much all across the board?
It's industry agnostic, but what we've developed over the years is a lot of doctors and a lot of lawyers tend to be the main bulk of our client base. Um, Simply put, they make a lot of money, and then they don't really have the time to do it themselves or kind of figure that out. So they're the ones that we have predominantly most in, but we have everything from engineering companies to HVAC companies to e-commerce people, cybersecurity guys. So it's like totally across the board. And it literally all comes down to the fact that 92% of people are overpaying on their taxes. And they don't even realize that the CPAs that they're working with are not actually working for them, but they are working for the government. And it's like, if
Mm,
you think that your CPA is incentivized to save you money in taxes, you're probably mistaken. So if you look at the
mm,
contract agreement, it doesn't mention any tax savings at all. They will file and they will make sure that you have a tax return processed, but they whether they save you 5,000 or 500,000, they're not getting any additional benefit for that. So to think that why would they put the time, energy, and effort into saving you additional money and not getting paid for it? Would you do the
mm,
same for them?
mm.
Probably not.
That's a good word. So I'm a financial advisor by trade, and I always used to say, is he a tax planner or a tax preparer? Right. So it sounds like what you
Exactly.
do is tax planning, which is
Yep.
counterintuitive because when you're planning, you're looking at the year ahead, right? Whereas a preparer looks at the year behind. But it's
Exactly.
interesting, man. The bar is pretty low in the industry. I feel like by and
Very
large,
low.
like it's pretty rare for me to talk to somebody who's like, yeah, my CPA rocks. He's killing it for me. He saved me all this money. It's like more often than not, it's like I feel like the government is getting more money than they deserve, you know?
And then they're wasting it, right? So if you look at the deficit of $37 trillion, if that was your business or my business, and we failed 7 audits in the row at the Pentagon, we would have been well shut down by now, right? And we can't just hit print and keep printing money like they can. So it's one thing that most people are significantly overpaying. It's a second issue that they don't realize that they're working with someone who's not looking to reduce that tax burden for them, and then don't we call it tax strategist rather than a planner, but effectively it's the same thing, right? We are looking at ways to reduce that tax for the client, and on average our clients save 51% every single year.
So would you
So
say, Casey, primarily you're doing tax planning now, or do you also do the fractional CFO work?
we do both, but primarily it's the tax planning. It's
Okay.
we've got two really great strategies that differentiate us from everyone else using philanthropy. So we call it strategic giving, is how we frame it, and it's fantastic because not only do you one get a huge tax write off, two get to make a difference and create your own lasting legacy, hire your family and your kids along the way, and really protect assets too. So there's a lot of benefits in doing it with the structures that we use, and it's pretty unique because, again, our biggest referral source is CPAs because they don't know how to do what we do, right? They may be good at a couple of loopholes. Let's say you have a real estate CPA who's really good at kind of conservation easements or bonus depreciation or
Yeah.
kind of cost segregations or whatever that is, right? That's great. That's one facet. That's one loophole, or maybe three loopholes that you can use. What about everything else, right?
Yeah.
So the way we kind of frame it is there's a loophole level. Let's say there's 50, 100 loopholes that you could potentially use, maybe
Yeah.
qualify for half of them. But then above that, there's the entity, the structure level. And that's really where we come in. If you're maximized out on your loopholes and you're still paying multi six figures in taxes, then you need a structure, and the structure will then do the heavy lifting for you.
Yeah. Okay, so let's do an elevator pitch, or maybe, in 60 seconds or less, without divulging your secret sauce. Tell us about the charitable giving thing that you typically employ with people.
Well, there's two, and I'll give you all the secret sauce because I live in a world of abundance. Right.
Yeah.
So the first one is simply a private foundation, and this is a very specific subset of a private foundation. So it's a private, non-operating family foundation. And what that does is it allows, this is specifically for high-paid W-2 employees, back to like a doctor that works for a hospital or a high-paid lawyer that works at a legal firm or engineer at Tesla that's making stupid money, right? So if you're in the payroll system and you're getting paid as a W-2, as a high-paid employee, then you can look into a private non-operating foundation. And that will instantly save you 30% off the top of your tax bill because you can donate. Let's just use simple math. Let's say you make $1 million a year. You can donate 30% of that into a foundation tax-free. So what does that mean in terms of like your take home? So on the $1 million, let's say you're paying 40% tax. I'm in California, so we get stung here pretty aggressively. So
Yeah.
that would mean in scenario one, you're paying $400,000 a year in tax. And then if you donated 30%, then 300,000 would go into the foundation, which a nice financial advisor like yourself could invest tax-free, no capital gains. And then you would only be taxed on 700,000. So then effectively 700,000 times 40% would be 280,000, right? So in that one move, you've saved 120,000 in cash flow on taxes, plus you still have 300,000 left over in the private foundation that can be invested with your wealth manager, let's say, that has no capital gains tax on it. And any dividends or any net profit that is produced from that 300,000 is only taxed at a 1.4% tax rate.
That's incredible. Yeah.
So
So now, in terms of your pricing, out of curiosity, do you just charge a flat fee, or do you charge based on, hey, I know I'm going to save you 120 grand here, pay me a percentage of that? Like, how does that typically work?
yeah, it's not a flat fee. It's a fee that's in line with the amount, similar to the assets under management. So if you've got
Yeah.
$1 million in the foundation, it'll be a certain percentage. You've got $100 million, it's going to be a lot lower of a percentage. So it's a sliding scale that goes down the more money that you have in. So that was scenario one in terms of how to save 32, 33% just by donating to your own foundation. Now, scenario two is actually a lot more powerful.
Just out of curiosity, Casey, how much, okay, I'm thinking of a buddy of mine who makes way too much money, works at a very well-known tech company that typically leads the S&P 500. So I know he gets hammered on taxes. I say, hey, I want to put you in touch with Casey. How much does it cost for him to just set up these things? Like, I'm sure there's some moving parts to set up the charitable foundation and all those typical, what's the typical setup fee for all that kind of stuff?
Again, it varies, but I'll give you a range. So if you went into a family office, something like this would cost you $5 million a year to create, run, operate the full shebang. So what we do is we take that one piece of the family office, pull it out, and kind of deliver that piece. So you're looking at a range anywhere, I would say, from 50 to 100 to set up and get it up and running. and then an ongoing management and maintenance fee, just as a
Mm,
ballpark. Again, everyone's
gotcha.
different depending on what they need in their specific structures and lineup to get
Yeah.
into the most. But as a ballpark, you're looking at
But
50 to
it
100
pays
k.
for itself over time. And
It pays for itself in year
you get
one, or it's
back.
not worth doing, right? That's
Yeah.
like calculation we like to do is if you don't get an ROI in year one, don't use us. If I can't deliver you an ROI, then come on, you go on to the next person, right?
Yeah.
Um, so
Okay,
number
let's go with
two,
number two. Yeah.
okay. So number one was a private foundation, amazing for high net worth kind of employees. Number two is for business owners, and this is a way to reduce your taxes by 50%. So the way it works is through limited partnership. And for those of you who are not familiar with a limited partnership, it's just a type of entity. So you can have LLC, which can be a single or a multi-member. You can have an S corp, a C corp, a trust, a foundation. A limited partnership is two partners, at least two partners. One is called a general partner that does the day-to-day work, and the other is called a limited partner, which is often referred to as a silent partner, just to give
Mm,
context about what a limited partnership is. And as an example of your AGI or your net profit at the end of the year, let's just say it's $1 million, use the same example, right? Same numbers. You can donate up to 50% of your net profit into this new limited partnership. And the limited partnership can be partnered with a nonprofit, a 501c3, a supporting organization. Let's just use the Red Cross as an example that everyone should know. So now the Red Cross can be the silent partner in this LP, and you can be the general partner with full power, full control. And you can donate as much or as little of that LP to the silent partner, the Red Cross in this case, as you wish. So
mm.
technically, you can donate 99% of that limited partnership to the Red Cross, and you can own 1%, but be the general partner and fully control it. What does this mean? So this means we can take that $1 million that we have, 50% of it, 500,000 comes into this LP. So now your tax bill goes from $1 million of AGI down to 500,000 of AGI. So you've cut your tax bill in half from 400,000 down to 200,000. And then the additional 500,000 is under your control in the limited partnership. And that might seem a little confusing, but generally,
It's not actually in my mind. I'm thinking of someone I know literally did this, and I thought he was just really charitable. And now I'm thinking, wait a sec, this is all tax strategy.
it's all tax strategy. So think about it, right? So people get confused over these two terms, and I'm going to explain them real well here. So there's a distribution that a company can make, and then there's also a K1 at the end of the year. You'll tot up how much you've paid them, and you'll issue a K1. So the difference is that the K1 is a taxation treatment. So as an example, if I've said, hey, Andrew, I paid you $500,000 this year, I'm issuing you a K1 for that. That's taxation, right? But if you were part of the Red Cross or their representative and you had at the end of the year a distribution from me, that would mean money would move from me to you. There's no requirement to make a distribution.
Hmm.
So the money can stay in the limited partnership and you can issue the K1 at the end of the year so you're fully compliant with everything. They don't care that they're getting a K1 because they're tax exempt. So although they're getting a K1 for, let's just say, $500,000 or 495 if we're getting
Now,
technical.
can you partner one and two together? I'm assuming that's where you're taking this, is you can do both, right? Yeah.
You can, but you don't need to. So in this limited partnership, the the 500,000 that came in has now been K1'd, or 495,000 of it's been K1 to the Red Cross.
Hmm. Dang.
But the money has stayed in the limited partnership. The money does not need to move. So, as an example, what you could do is you could take that 500,000, you could put it in with Andrew and have Andrew grow it for you at 10%, 20% a year, depending on how aggressive you want to be. And then let's say at the end of year two, that 500,000 is grown at a 10% rate. So now it's 550,000. On that 50,000 gain, you are only responsible for 1% of it that gets K1 to you. And the other 99% of that 50K goes to the Red Cross. but you
Hmm.
still fully control it. So it's the difference between ownership and control. I'm sure some people are familiar with the phrase own nothing, control everything. And these are two
Hmm.
examples of how you could do that and get the tax benefit treatment, but stay in control of the funds
Hmm.
so that you can grow it better. And it's similar. It's kind of a hybrid between a donor advised fund and a charitable remainder trust. If people are familiar with those two
Yeah.
phrases, but the difference is that the money stays in the LP for investment purposes only, and can be
Hmm.
grown by a good wealth manager, diversified into stocks, real estate, whatever you wish, and you have access to issuing loans from that also. So that's probably what your friend is doing. Yes.
Yeah, I'm almost positive he is. Okay. What, Casey, as a business, first of all, just out of curiosity, you don't have to give us anything with your P&L, but just out of curiosity, overall revenue, and then how many employees do you have?
We'll probably do by the end of this year, I think about 6 million when we've got 31 people.
Nice. What are some sticking points you feel like you're experiencing in your business now? Like, what are some barriers or things that you're trying to overcome or solve for?
For me, I'm trying to buy as many accounting practices as I can. That's the number one thing because there's so many boomers here that are aging out without any succession planning. And they're all very archaic in the way they run their businesses that we can just do it more efficiently. But I think that's more of a growing pain than anything. Day to day pain is how do we integrate AI into pretty much everything that we do? Because
Hmm.
if we don't do that now, we'll be gone within the next 5 years.
Hmm. What are some ways that you feel like you could be integrating it, and what ways are you?
So we created a software called Financial Fusion, which is an AI CFO, and that's been working really well with our clients. It's effectively a plug-in to QuickBooks, a plug-in to Xero, whatever accounting software you use, and it gives you an AI CFO for a fraction of the cost, right? So when I was doing fractional CFO services, I was charging 5, 10 grand a month per client, give or take, depending on what the scope was. You can now get that same level of service or very similar for like $500 a month. So it's working really well for our clients to be able to have an AI that knows their numbers, that isn't going to dazzle them with accounting jargon and kind of make their eyes gloss over. So that's one thing we're doing. We also hired internal AI people. They created that software for us, but we've got our own internal AI team, and they develop everything for us, whether it's a quick internal tool that we need or whether it's like this full on software that we've created.
What are some areas that you feel like you could be using it, but you're not?
What, the AI CFO or AI in
No,
general?
just AI in general.
On our outbound, I think, accounting firm, we're not the most tech savvy when it comes to the latest and greatest marketing techniques to bring in new clients. Like you
Hmm.
said, most people are very dissatisfied with their CPAs. But what's the cost of moving, and what do we need to do to increase that for, like, or decrease the cost of moving and make it seamless for them so that they have a great transition? I don't think anyone's really mastered that yet. I think other than getting the tax returns from previous years and going through them, all very manual, right? If there was a way to kind of automate that and make it seamless for the client to have an Apple type experience when they're on board with us, that I
Hmm.
think would be pretty special.
All right. What's something that we haven't talked about today that gets you fired up? Could be sports, could be faith, it could be family, it could be anything. Business principles.
Well, I'm British. I'm born and raised in England, if you hadn't guessed by the accent. It's going through a crazy revolution right now. We had 110,000 people on the streets this weekend, and a lot of that was from what happened here as well with Charlie and everything. So I think we're getting to a stage, without trying to get too political, where the people in power are failing the actual people, and the uprising and the people coming together is starting to happen. Not just in England, across Europe too. We look at France; their government's failed. We look at Germany, and it's kind of one disaster after another globally. So I feel that people are starting to see that on the mass scale and
Hmm.
kind of catch up to what we've been predicting for a while.
So, okay, I don't keep up with the news. Shame on me. But so what happened? Like, was it mainly because of the Charlie Kirk stuff, or why were there over a hundred
No.
thousand people in the streets the other day?
No, I think the Charlie stuff just added to the fuel, added fuel to the fire. But in England and in Britain specifically, it's more to do with the mass illegal immigration, and then not just that, but the treatment of government of the immigrants as well. Where as just one example of many, the government said that it will treat the immigrants better than its own citizens. Firstly, I'm paraphrasing there. Secondly, people getting locked up for posting on Facebook and tweeting on Instagram, tweeting on Twitter and stuff like that. I
Hmm.
feel is absolutely ridiculous. Thirdly, there was a woman that got locked up. And when I say locked up, I mean went to actual prison here for doing a silent prayer on the street.
Hmm.
Now, a lot of this stuff, you wouldn't believe me if I told you, but it's all factual. Go Google it. And I think that's just taking it too far, and I think the vast majority of British people think the same as well. So
Hmm.
that's kind of been the straw that broke the camel's back in that case.
It was so interesting. Just on my ride to the airport the other day in Charlotte, I was talking to a guy that was from Venezuela. It was my Uber driver. And he was like, I'm one of the good ones. I'm like, I didn't say you were a bad one. And he was like, well, you never know. And he was like, I love this country. I'm so grateful. He's like, where I grew up, we have bars on all the windows. We have to lock our doors. We have to look before we go out in the street at night. They don't like, they're not helpful when you start a business. People wind up in prison for no reason. And he's like, I love this country. And I was like, man, that was a kick right in the gut for me, who like all the first world problems I have and all of the things I complain about. And we have it so good here. Even, things are jacked up. Like, don't get me wrong, $37 trillion of debt. But man, we're so blessed and fortunate to live where we live. And I
100%.
often don't think about that. I don't think about that. So
Yeah, we're very fortunate for sure, but again, you've got to do things in the right way. And when the people like the way I look at this is it's been twisted for a long time. Is the people that are put in power are there to serve for us, right? They're not there to dictate over us. And when
mhm.
they come into power and they're saying one thing, and then the next day they're changing their minds because now all of a sudden they're in power, that's really what what's happening in England. It's that you lied to get in. We thought you were better than the other guys that we kicked out. You weren't. You're actually 10 times worse. And then all of these other personal things start coming out, and it's just it's a shame because obviously I'm born and raised in England. I have a lot of love for the country, and I don't ever want to see it in the ruin that it's turning into. But as an example, 40,000 doctors are leaving the country right now.
Hmm.
40,000 doctors. It's a small country. So to have that bigger outflux of doctors, and it's
Where are
the
they going?
most all over the country, all over the world. I think most of them will probably end up in Dubai or the Middle East somewhere because the
Hmm.
quality of life there is a lot better. It's so funny because a lot of this is about Sharia law as well as an undercurrent of that, and they're going to an Islamic country to go live because it's safer than in England, where people are getting stabbed in London and watches are getting stolen on such a frequent basis that it's scary. It's not safe
Hmm.
anymore.
Hmm. What going back really quickly, switching gears heavily to the back to the marketing thing.
Yeah.
How do most people find you? Is it through a funnel? Is it through a referral?
Yeah, referral is how we've grown traditionally. And then as we're kind of buying up more accounting firms, we are now doing more outbound marketing as well. So we're uh, we're exploring with ads on Google and Facebook and email marketing and things like that. Again, stuff that I'm not really familiar with. It's very much out of my comfort zone. But the best way to grow a company is obviously through referrals. It's just can you get enough of them to scale to where you want to be? That's
Yeah.
always been kind of the issue with them, which is a good problem to have. Don't get me wrong. Similar to wealth managers, right? If someone's doing a good job for you in wealth, and you tell your friends on the golf course, "Hey, you need to speak to my guy. He'll outperform your guy," or whatever that flex is, usually from clients. Then as soon as they have a conversation with us, they realize that they've been drastically overpaid. And 50% is no joke, right? The vast majority of our clients are business owners. So if they can save 50% a year and they can put that to work in their business for their kids or whatever they wish, that's a huge saving every single year. So we can easily demonstrate 50% without any sweat. And then if we wanted to even take it further, you can add in additional loopholes to get it down even more.
Well, Casey, thanks so much for joining us on the show. And you guys heard it here first. Number one, if you listened and you wanted to get in contact with Casey, what would be a good way for someone to reach out or find out more about you?
Yeah, you can go to our website, togethercfo.com, and you can set up a free call with our team. And top right-hand corner, you can set up a call, get on a consultation, and we'll show you exactly how much you're overpaying every single year, but more importantly, how to stop overpaying so you can put that money back in your own pocket.
I love it. Don't go anywhere because I want to keep chopping it up, but thanks so much for coming on the show.
Okay, you're welcome. Thanks for having me.